Good afternoon and welcome everyone to our first Asian regional webinar, jointly hosted by CANZ Singapore, Hong Kong and Malaysia. My name is Samantha Chan. I hope you're all keeping well and keeping safe. And together with my colleagues Divian from KL and Elizabeth from Hong Kong, we are delighted to welcome members from these three locations to join us today for this webinar. Today we have for you the phoenix and the ashes, the winners and losers of COVID-19. Well, COVID-19 has unleashed some of the greatest challenges of our generation. Aspects of our lives will be changing forever. We have an all-star panel cast for you today to discuss the impact of economic profits and business profits around our region and around the world. Firstly, we have from Singapore, we are joined by Manu Bhaskaran, a partner of the Centennial Group. From Hong Kong, we have Dr. Sun Ming Chun, Chief Economist of Hai Tung International Securities Group. From Malaysia, we have Dato' Jeffrey Ng, CEO of Sunway REIT Management. Our moderator for this session is David Liao, Managing Director of Mencast Group and current Chair of the CANZ Singapore Council. We would like to keep this session as interactive as possible, so please do use the Q&A box that's located at the bottom of your screen to ask any questions that you may have throughout this session, and we will get through as many of those as possible. We also have 3 polling questions throughout this session, so please do keep your mobile phones handy so that you can participate with us. Now, before I hand it over to David, I would like to show a disclaimer, and my colleague Divian will help me with that. Thank you, Divian. And just a Zoom tip, if you'd like to see the entire panel throughout the session, please do set your view on the gallery view. And with that, I'd like to hand it over to David. Over to you, David. David, are you there? I think David's experiencing some technical difficulties. We'll just give him a second. Hello, David, are you there?
Hi, sorry.
No problem.
Always at the critical moment. I think I might have dropped out there. Apologies.
No problem. Over to you.
Yeah, I was just praising network technology a moment ago, and apparently a little too soon. But hello and welcome everyone, and thanks for joining us. I can't tell you how much I've been looking forward to this webinar. Not only do we have an excellent and learned panel today, it's also our first regionally organized webinar. So thanks to our colleagues in Hong Kong and Malaysia, Vincent Leong, Samuel Cheng, and Tan Yun Huat for their hard work in organizing this. Today's panel are seasoned experts that advise investors, governments, and sovereign wealth funds. They manage companies and sit on boards that are represented by billions of dollars of assets. For many of us who have been sitting at home wondering what's happening in the world outside, our panel will inform us on how we prepare for a world during and after COVID. What happens during COVID is something we all play a part in. So let's get started with getting a pulse of the audience with a couple of polling questions. We're using Mentimeter, which means that you'll need to grab your phone and scan the QR code. This will take you to a link where you can enter your responses. The first question is, how would you describe the last 6 months? So we're waiting for answers to come in. I think it's kind of crazy, you know, a lot of us during Christmas were on holidays, the world as usual. January, things started thinking, uh-oh, looks a bit strange, keep an eye on this. And 3 months later, half the world is locked up at home, you know, watching Netflix and trying to work out the Zoom functions. So I think we should have the results up shortly. Are we able to get that screen up? Okay. So the great thing about this software is that it actually shows you by the size of the word what is on most people's mind. So uncertain, volatile, and crazy. You know, I think that's pretty much like it. I see the word surreal too. And I remember back in January, a friend of mine was saying, you know, it's like watching a movie, you know, instead of having to make sure that we don't wear a mask when we go into a bank, now we're told we have to wear a mask when we go into a bank. So that's great. Let's get the second question up. The second question is, what are you looking forward to in the next 6 months? So just wait for the QR code. And then if you could just help again by scanning it in when it comes up. This is a pretty interesting question. I've been watching some polls, and some of them are saying that after it's all over, people, you know, will structurally change how they live their lives. Some people will take less holidays. Some people will continue to shop online more. And I also saw something that said that digital currencies usage has gone up by about 30% over this period. So I think we've still got the old data there, and we're just waiting for it to come up again, I think. But while we're waiting for that, you know, the thing that surprised me is having been at home by myself and with my family, it's that you miss the really, really simple things in life, you know, being able to take a walk when you feel like it, go downstairs without a mask, you know. For me, that strangely has been ranking higher than, you know, not being able to take a holiday. though I see the audience here disagrees with me. The #1 response is travel. And I certainly would say that I personally, having said that, would not mind being in Europe or somewhere else like that pretty soon. The travel, opportunity, life back to normal, work less, freedom, change, leaving the house. That's my top response. Okay, that's great. So thank you all for your participation. With that, I'd like to hand over to Manu Bhaskaran. He's going to talk to us about the new normal. So this is about exactly what the last question is about, getting back to normal. Over to you, Manu.
Thank you. Thank you, David. Thank you, Samantha and team, for inviting me and organizing this. In the short time I have, I'll just talk about 5 points. The first 3 might sound a bit downbeat, but be patient. The last 2, I will end on a somewhat more optimistic note. So I see 5 changes that will basically mark out the new normal. Right? The first is that I think the crisis has aggravated existing political trends, and these will basically produce, I think, a much rougher, more turbulent world for the smaller nations in Asia. And I think this is very unfortunate. The most important strategic relationship today is between the US and China. And there's no doubt that actions on both countries' sides have unfortunately resulted in the relationship, I think, going beyond the point of no return. On the US side, I think they have reached the point that was reached between the US and Russia in December 1979, when the Russians invaded Afghanistan, and effectively the whole mood in the US changed and it became very anti-Russian. I think something similar has happened. And this goes beyond just a certain president and his re-election bid. I think whoever becomes president, unfortunately, this relationship change will continue. And China, on its part, has also been quite assertive, including within the region close to us. I think the successes that it's had in the last 12, 13 years, meeting the global crisis, and now this crisis effectively, while the rest of the world floundered, has given the leadership that extra confidence to push the envelope, to take more risks. And unfortunately, that means problems, whether it is along the Sino-Indian border, whether in the South China Sea with Vietnam and the Philippines and so on, or in Taiwan, or in East China Sea with Japan, or indeed with Hong Kong or Australia. So there will be consequences for the rest of us. I think this change in the relationship feeds into a more inward-looking political class that will produce more protectionism. I think trade and technology become combat zones, unfortunately, and that means protectionism. It means trade technological bifurcation, and that is really not a good thing for us. And unfortunately, if I'm a Singaporean, I look at it from a Southeast Asian perspective. this is the main arena, I think, for big power contestation. And that means difficulties for us. We have to spend more on defense. We have to think harder about alliances and divert more resources to these unproductive things that we would rather not. So that's the first set of changes, not very good. Second set of changes is that I think the crisis causes changes in the behavior of economic agents that will result in lower growth. If you look at households, the ordinary person, I think they will want to save more because of this shock. The shock has reminded them that it's very important to have buffers that you go back to in a crisis. Same thing for companies. They want to increase the cash buffer in their balance sheets, but more importantly, they want to focus a lot more on resilience rather than just profit making, cost minimization, and so on. And that, I think, makes for lower spending, more cautious spending by businesses going forward. And if you look at governments, clearly the massive amounts that have been spent through the public budget will result in big debt burdens. And this happens at a time when governments will be under pressure to spend more to improve public healthcare systems and also to build out further social protections and social safety networks. So this is going to be very difficult for governments too. And the net effect really is, I think, reduced growth in spending, slower growth. The third set of changes is related to the monetary policy responses that came about from the crisis. We have seen a return to quantitative easing on a grand scale. We've also seen some central banks go further and even begin to do what economists call debt monetization, or what the layman would call printing money. I believe these things will create all kinds of risks in the longer term. I think we are in for much greater volatility because a lot of this liquidity that has been unleashed will move around market to market and would cause wild swings in asset prices. I also see imbalances grow because whenever there is too much capital, too much liquidity, whenever risk and capital are priced too low, people make mistakes. They make misjudgments that produce imbalances, which eventually come to haunt us. So these are the three negative trends. Luckily, there are a couple of other trends that are a bit more positive. The first is that we've seen the emergence in the last decade of multiple new technologies that have now reached a point where they are likely to take off. And if anything, I think this crisis is going to accelerate the takeoff in those technologies. You've had the miniaturization of computing power, which really has produced all kinds of new initiatives, digitalization, the greater use of artificial intelligence, robotics, and social media platforms, which allow new business models, new ways to market, and so on. These things will be accelerated. You also have biomedical advances, new drugs, new therapies that will really, I think, improve livelihoods everywhere. You have an energy revolution. Solar and wind power and other renewables are going to see accelerated growth. And you also see huge progress in advanced manufacturing techniques like 3D printing. All these things will bring new business opportunities. And if businesses feel confident enough, it's a big if, you'll see a new wave of spending that will, I think, help to promote growth and counter some of the ill effects that I alluded to in my first 3 points. Finally, it's also encouraging to see that some of the large developing countries in Asia are responding to this crisis in a very positive manner, looking beyond the crisis and engaging in reforms that I think will substantially improve the growth outlook. In China, they're not just using monetary policy to boost growth in this crisis, they're also engaging in more reforms, supply side reforms. So the hukou system of restrictions on rural migrants is being relaxed. We are seeing a huge splurge of spending in what they call new infrastructure to create large new urban clusters, which I think will be very powerful. We are seeing a big surge of spending in R&D as well to promote China's technological self-reliance. That's going to be powerful for growth. In India, while the government has struggled a bit to contain the immediate crisis, it has been encouraged by the crisis to undertake at the state level, not the national level, but at the state level, groundbreaking reforms in labor and land laws. And I think once these are rolled out to other states, it's going to be very positive for India. Same thing in Indonesia. The government is pushing through big reforms in the labor market and continuing to accelerate infrastructure spending. So the bottom line is that the world will be much more challenging. There are going to be a lot more headwinds, a lot more difficulties, but countries that have the resilience to absorb these shocks, the volatility, the episodic stresses that will come and bounce back, countries that have the ability to adapt and adjust, they were the ones that are going to be the winners. They're going to be the ones that will be able to exploit the opportunities while containing the negatives and doing much better than before. So let me end here and hand back to David. Thank you.
Hey, thanks, Manu. I think that's a great summary. So if I understand correctly, we are heading in a world where the change that was already happening is accelerated, and it's, we're heading to the same destination we're heading to before. But in some ways, a whole bunch of new things will also come back. So in our question 2, we said, when are things going back to normal? It should actually be, when are we going to be hitting a new normal, I think.
That's right.
Thanks for that. With that, let me bring on our next speaker. That's Dr. Sun Ming Chun. He is an expert on China, amongst other things. China, of course, is one of the big economies. I've often said that if you were an alien, and you're watching the news, you would think that 70% of the world was the United States, because that's their influence on the world. Now, for the first time, we've seen a rising and increasingly powerful country, taking more of the news, becoming more important in the global economy. And I'd love to hear from Dr. Sun, what we should be expecting next. Over to you.
Dr. Sun, can you unmute yourself, please?
Sorry, I forgot about this. Thank you. Thank David for introducing me. I'm very happy to join this panel discussion. I prepared 8 slides to show you what's going on in China and Hong Kong. So we all know that China and Hong Kong are the first places that entered, one of the first places entering into this pandemic. In both places, the virus was contained fairly well. Especially in China, in mainland China, this is a big country with 1.4 billion population, but only 85,000 people were infected, so, at least based on the official numbers. So actually, 2 months ago, China has already started reopening its economy. So I think the world can look at China for a clue of what's going to be like. What's going to be like if the global economy, the U.S. economy, goes back to normal. But the issue is that if you look at the charts I prepared for China and for Hong Kong economy, it's not that encouraging. There are some positive development, but it's not very encouraging. If you look at the chart, the first one, this is the China's official PMI, Purchasing Manager Index. You can see there was a sharp decline early this year, and that decline was actually worse than the situation in 2009 in the global financial crisis. Fortunately, you can see we have seen a V-shaped recovery, but we need to keep in mind that this is a month-on-month data, and 50, the line, the dotted line 50 means contraction and expansion line. This is the separation of contraction and expansion. We do see the numbers going back above 50. The economy is expanding again, but only compared to the previous month. If you consider the decline, the sharp decline in February, in March, you can imagine that even with these numbers coming back above 50, in absolute level, the economy is still weaker than before the crisis, before the pandemic. If you can go to the next slide, I can show you what happened on the production side, on the supply side. If you look at this chart, this is China's industrial production. It's now back above zero. It's, the latest number is 4.4% year-on-year growth. Year-on-year growth looks very encouraging, because this means we are now on the production side. It's already back above the level, before the pandemic. So that's encouraging. But if you go to the next page, you can see it's still problematic, because if you look at the demand side, the production on the supply side, the economy is after the economy reopens, the production side got back to normal already. But if you look at the demand side, retail sales, this is consumption demand. Fixed asset investment, this is investment side. Both of them are still about 10% below the level a year ago. So we are not, even after 2 months of kind of reopening of the economy, we are still 10% away from the so-called normal level. So production side, supply side is easier to go back to normal, but on demand side, like what just Manu mentioned, people's behavior, business model, income level, all these have changed. I would say it may take some time, probably pretty long time, for us to see all the numbers go back to pre-crisis level, pre-pandemic level. If you look at, if you can go to turn to the next page. If you look at external demand, so far, if you look at export, China's export, if you look at it's on the right axis, the X number export growth wasn't as bad as people expected. But if you look at one of the leading indicator for China's export, which is US SM index, it tells us most likely we are going to see even sharper decline in the coming month. So if we think, if we consider the fact that in this world, over 200 countries are having this pandemic, and yesterday we are seeing record new numbers of infection cases. The pandemic is not over; it's getting worse, even though in some places it's getting better. So the outlook, export outlook for China won't be very bright. That's my worry. So this is basically a very short picture, very like a short summary of China's economy performance. If you look at the next page, I'll talk about the Hong Kong situation. This is Hong Kong's GDP. In Q1, 8.9% decline from a year ago. But if you look at this chart, it actually started 3 quarters ago. It's not a new thing. Hong Kong's economy entered into recession starting from Q3 last year. We all know about the reason behind that. But the issue that, we had these social issues. We have this also in 2008, 2018, starting from 2018, we had this US-China trade war, followed by the social event last year. And then we had this pandemic. So we have like triple whammy, not just double whammy, triple whammy situation for Hong Kong. And the numbers showed us that the situation today is even worse than in 2009. So that's the GDP. If you look at the next page, this is visitor arrivals. Hong Kong is a city. It really depends on international, international tourists or international visitors for a lot of activities, economic activity in this city. What happened because of the pandemic, because of the border control, quarantine measures, visitor arrivals declined by 99.93%. So in April, there were only 4,000 people coming into Hong Kong. This is a big hit. We never saw this kind of situation before. Even in SARS period in 2003, if you can see from this chart, we didn't, experience something like this. So you can imagine how big hit the domestic economy got from this pandemic crisis. If you look at the next page, I can show you the retail sales data. Retail sales data come down by over 30% in both value and volume terms. Again, this is not new. Even before this pandemic, we are already seeing like over 20% decline in retail sales. So it's really, really a very, very difficult situation for Hong Kong. If we turn to the next page, it's not surprising for us to see this unemployment rate surging to 6%, which is basically the highest in about like 14 years. And we all know like the Hong Kong government very quickly introduced two fiscal relief packages. I think the amount is pretty big. It's about like 300 billion Hong Kong dollar. Part of that is some measures to help relieve these unemployment issues. But even so, basically some of the package requires the employer not to lay off people in order to receive the government subsidy. But even so, we are still seeing this 6%. I think there are still a lot of challenges ahead. So basically, I'm going to stop here. So what I'm going to say, my conclusion is that even with the economy reopening, we are still facing very, very big challenges. I think considering the situation globally in terms of this pandemic spread, I'm still quite worried about the situation in Hong Kong, China in the future.
Thanks very much, Ming Chun. When I was looking at the charts of the previous crises, we've seen two pandemics, SARS and H1N1, and also a few economic crises. It's been quite surprising how quickly we've recovered from both of those. And I think you've made a very good case that perhaps this crisis is a bit unusual. We've seen both demand and supply being imploded at the same time. So in the past crises, we've only seen one side of the equation and the other side has been largely intact. So it'd be interesting to see how we move forward. Thank you for that. And let me introduce our next speaker, Dato Jeffrey Ng, who will be talking to us on Malaysia and also as a seasoned businessman, I believe CEO of the year in his sector. He'll be talking to us about some of the business implications of what we've just heard.
Thank you very much, David. Good afternoon to all. Talking of crisis, for our generation of baby boomers, COVID-19 is to me the mother of all crises in regards to the fact that the economic, the health and the social ecosystem basically went into reverse gear. And as well that we saw disruptions in the supply chain, as well as a demand crunch on the global scale. And talking of global front, we are now seeing business collapses and bankruptcies of large corporations. Even world-class MNCs have announced employee layoffs, as well as business downsizing. In many ways, the COVID lockdown in Malaysia has actually brought businesses down to its knees. And it is a recession that we have to have. If you think about it, it is on the average of that 10-year business cycle that we are all going through over the last decade. In the Malaysian context, we have what we call it as the Movement Control Order, MCO, the Conditional MCO, and the Recovery MCO. And all these effectively total 21 weeks of different degrees of lockdown. And what we have witnessed in the real estate area is that for retail malls occupancy, we are seeing that in the brackets that I just mentioned, mid-teens occupancy during MCO, 40 to 60% occupancy during CMCO. And now in RMCO, it's about 60 to 90% occupancy. So we're not absolutely back to normal, but we are slowly getting there. For hotels, we noted that we had 0 occupancy during MCO, single-digit occupancies during CMCO, and 20 to 40% occupancy during RMCO towards the end of this year. And what is more interesting about the hotel sector is that it's been announced that 48 hotels will be closing down in the country. If you multiply an average of 100 jobs per hotel, you are really talking about, you know, almost 5,000 of staff to be taken out from the workforce. The office and industrial properties has remained largely unaffected. Housing sales saw a decline of 50 to 70% during this lockdown. So as you can see, Malaysia's dilemma of these 21 weeks of lockdown is really about a balancing of the social needs versus the economic interest. If I may just move on the government stimulus package, 295 billion were actually announced in the form of 4 packages. And they are, in my view, responsive and comprehensive to restart the economy. Objectives are about keeping jobs, hiring the unemployed, reskilling the workforce, and incentivizing the population to spend and private sector to invest, protect business continuity, as well as improving productivity. Government has no choice but to bail out the most affected groups in the rakyat and the business sector, especially if it wants to avoid and to mitigate social unrest, bankruptcies, and underemployment. To put things into context, daily wage earners and contract workers, they live from hand to mouth. SMEs in vulnerable sectors such as retail trade, construction, leisure and hospitality, tourism, food and beverage, entertainment are all hard hit and in what I would call it as a mode of bare survival. It is also worth noting that the stimulus package announced, which is called Prihatin and Penjana, are more broad-based with immediate impact felt by the beneficiaries. This is especially important in that previous budgets announced by the governments have always been very focused and specific. And I think in a situation we have got now, the benefits must flow through on a broad-based basis rather than limited only to specific groups of beneficiaries. On the outlook and how to position your business, I'll just summarize it in this manner. It is full of uncertainties and there are a lot of unknown vulnerabilities. And there are also clear signs of a recession. 2020 and 2021 will be a test of the survival of the fittest. Consumer confidence is fragile because income instability arising from retrenchment, VSS, and pay cuts are all part and parcel of how we're going to keep ourselves together. Things will probably get worse before they get better, and recovery may take longer than expected, especially with the outburst of the second wave of COVID in other countries that we have noted. Of course, if you read what IMF, World Bank, and ADB says, there's an expectation by these economists that we will see a V-shaped recovery, meaning that we are seeing the gloom and doom this year before seeing blue skies next year. Personally, I am not sure about this for two reasons. It is about confidence. I don't see the feel-good factor on the ground as yet. People will be cautious. And secondly, time is of essence. My greatest concern would be that where businesses will be underwater, whether the businesses will be underwater by the time that the RMCO is lifted, especially for the financially weak entities. So therefore, we would need to take preemptive measures such as cost containment, cash conservation, strengthening the balance sheet, robust risk management to manage through the challenging times. Cash flow management is paramount, profitability is secondary. You can make it back if you are still around. We need to go back to basics because the market will remain budget conscious and price sensitive. Businesses must modify traditional demand habits and create new demand. COVID-19 lockdown has also accelerated the digital space via online. We are seeing technology disruptions that offer convenience, better productivity, space, speed, and lower cost to consumers and businesses. Your ability to adapt and respond to these mega trends and lifestyle needs will sustain your business in the long run. In summary, and from experience, if your business can overcome this COVID impact, then you will be in a position to grow bigger and faster and due to lesser competition, and when you're operating under a leaner and meaner organizational structure. Thanks very much.
Hey, thanks, Dr. Jeffrey. I think that's a great explanation of the difficult balancing act we're all facing between lives and livelihoods. You know, as we look back to previous pandemics in the long distant past, you know, the Black Plague, the Spanish flu, and the responses to those things, we can say, well, they didn't do that great. But I'm wondering whether our grandchildren, when we're talking to them in the future, will say, so what did people do during the Black Plague, you know, the COVID-19? The answer will be, well, we stood in our houses and we threw gold out the window. That is, you know, we haven't had the second round of operational changes in behavior and so on that we really need to. Maybe what the governments have done is all they can do, and maybe the ball is now in our court as consumers and business owners and influencers. Take it forward. With that, I think it's probably time for our third question. It's an audience polling question. You've heard from our panelists what they think we should expect in terms of how long it will take for a recovery. So we're going to ask the audience now what you think. How long will it take before we're likely to go out, socialize, and take holidays like before? And unlike the past questions, it's not a word answer. It's actually a choice. So I think the nice choices are probably 3 months, 3 to 12 months, 12 to 24 months, and never. So looking forward to seeing the responses. While we're waiting for that, I noticed a few of you have worked out the question and answer session. So we're going to be taking questions and answers soon. We already have a number of good questions. And if you've got any questions you want to get in, please get them in quickly, because we reserved the last quarter of our call for just questions and answers. So I see it's our group, our audience, which largely comprise chartered accountants, have taken a very sensible, very economist-friendly view of the world, 1 to 2 years, which I think is in line with probably a lot of people. So far, no one said never, which I think is probably the most interesting question. And I hope everyone is right, and it will be sooner rather than never. With that, let's open up to the audience to questions. We've already got a couple of very interesting questions in. Let me just pull out the first one. Dato Jeffrey has already spoken on this, but perhaps I can call on the other audience members and Dato Jeffrey again if he wishes to talk about the shape of the economic recovery. So a lot of economists, a lot of advisors, strategists like to talk about shapes, alphabets. We have the L shape, which means that we never recover, the V shape, which means we recover really quickly, U shape, which means it takes some time, but we get back to normal. And we have a W shape, which is probably the nasty one because it means that we go up and down and up and down and up and down. So it's a great panel to speak on this because we are represented by all major stakeholders, I think, in the economy. Manu, amongst other things, advises the IMF. He's one of the best-known economists in the Singapore and regional markets. When I used to work in investment banking, I don't know whether you know this, Manu, but we used to call you the mighty Manu because whenever you published something in the paper, it was required reading. We needed to have an opinion on it because our clients certainly did. So maybe I can ask you, what shape do you think the economic recovery will take?
I think it's going to vary widely across countries. I think countries that have shown the capacity to contain the virus quickly, China, Taiwan, Hong Kong, South Korea, Japan, Australia, New Zealand, Singapore, Malaysia, Germany, and a few of the European countries. I think for those countries, I think there's enough resilience in the consumer sector and among businesses to see a recovery, a fairly strong recovery starting in the fourth quarter of this year and continuing to next year. But the countries that have struggled to contain the virus, and here I'm talking about India, Indonesia, Philippines, the United States, unfortunately, and perhaps the United Kingdom and so on, certainly parts of Latin America, I think they're going to take a very long time. So you're going to see very wide disparity in outlooks.
Right. Great. Thanks for that. Ming Chun, could I call on you and
Sure.
ask for your thoughts?
Sure. I agree with Manu. One thing I just want to add is that even for those countries like China, you see a kind of V-shaped recovery. I would say the first part of the V-shape is probably easier job. But when you try to write the end of this V-shape, I think it would probably take a longer time, maybe something like a check mark. But so just I want to say that we need to be prepared for getting the 10%. Yeah, prepare for a long time to get to the 10% recovery.
Yeah, I forgot about that one. That's the last one I didn't mention. That's the Nike swoosh symbol, I think, or some people call it the hockey stick.
Oh yeah, yes, that's right. That's right.
Dato Jeffrey, anything to add on that?
Yeah, I have already stated that the feel good factor. I don't see it on the ground, and I really believe that people are going to be very cautious, and resulting from there, even if there is excess liquidity, the consumption and the investment, I think very likely will be held back. So this is something that I really don't see a V-shaped recovery, despite all the big economists thinking that will be the way. If it's anything, once we have got this so-called vaccine that comes into the picture, then maybe we will start to see things will turn.
Yeah, great. Well, thanks for all your answers. As you spoke, I was realizing, that every country, and it really hits at home, every country has got a different response. I was reading the papers just a few days ago, and reading that in the US, there's 30,000 new cases, and for the most part, the bars remain open, people are still getting haircuts and going out. In China, I think we had less than 300 cases, and then suddenly we're hearing about, new lockdowns, new measures, new testing, and so on. So certainly, I think all of us can try and be prepared for the different pace of recoveries in different sectors and different countries. We have another question from the audience. It's from Winifred Fan. She's asking, does any of the panelists see systematic risk? Maybe I can take the questions in the same order just for ease. So Manu first, do you see systematic risk in the economies?
As I mentioned, I'm a bit worried about the large amounts of liquidity that have been unleashed by central banks everywhere. And my experience tells me that quite often this produces potential shock. So I'm not sure whether you would call that systemic, but certainly I wouldn't be surprised if in 2 or 3 years' time, we had another round of serious financial stresses.
Interesting, yes. I remember I had an opportunity to ask a Nobel Prize winner this question, Robert Merton. He's an expert on risk in a different context, about how often should we expect to see crises? And he made an interesting comment. He said, the human psyche is tooled up for crises every 8 to 10 years. So we're not prepared to spend the money to make it more safe than that, but we certainly also don't want it less safe than that. Ming Chun, perhaps your thoughts.
Sure. First, I agree with Manu on the risk he mentioned. I think it's a middle to long-term issue. The timing is very difficult to tell. But on the other hand, I think probably in a relatively shorter term, there is a systematic risk, which I think is probably the debt risk, the debt default by developing countries. You know, the developed countries like Japan, like US, like Europe, they can print their own money. But for developing countries, their government cannot spend unlimited. Their central bank cannot print money unlimited. If they enter, you know, if you look at the numbers, the new case numbers, you know, Brazil, Russia, and India are now picking up. So if their economy were hurt, you know, they have to rely on debt issuance. I think at some point we are going to see, you know, the sustainability issues for those countries, I think.
Terrific,
this will also affect the developed countries because they are the debtor, they are the lenders. They will be affected, I think.
Right, yes, good points. Dr. Jeffrey?
Yeah, I think my biggest worry really is about the stock market that we're currently seeing. It is, you know, already at its so-called recovered all-time high, and we are at, you know, all-time low in terms of interest rates. So if ever, I think that it is the stock market, i.e. the financial markets, that we need to be worried about. Low interest rates today, it's for good reasons, but the moment we see interest rates moving up, that is when I think we might see, you know, a reversal of money flow, and therefore we might see something big happening in the stock market to come. So I think that we have to be very mindful of.
Great. Thanks for that answer. Maybe we'll stay with you for the next question, Dr. Jeffrey. The questions we're getting largely fall into two groups. One is China and the rest of the world. The other group is what's happening with Malaysia and Singapore. And bearing in mind that the majority of our participants today are from Singapore or Malaysia. So just on this question, you know, we're getting questions asked about financing, rate deficit, the ringgit, property prices, the high-speed railway. Perhaps if you could give us some thoughts on, you know, the relationship between Singapore, Malaysia, the flow of travels and the economies.
You know, the moment you talk about this, we have to talk about Malaysian politics. You know, and that, as you know, it's always particularly sensitive. I think the realities now is that the swell, you know, in the political scene, whereby the previous government and the current governments are all working towards, I mean, already speculation talks about snap election. So this is an area whereby I think only the time will tell as to number one, you know, whether the so-called current opposition will come back in to show the majority number of seats in parliament, and this is probably anybody's guess right now as to how it will pan out. And I think that at the end of the day, whichever the government comes to play, whether the current or the previous, it is really all about their commitment and ability to bring back the good feel on the ground. And I think this is currently, the consumer as well as business confidence are really not there yet. So this is, I think, what is the top priority, whichever government comes in.
Great, thanks for that. We've been getting a number of questions, and by the way, thank you all for the huge list of questions. I'm paying attention and trying to scroll down the list of questions at the same time. But we're getting a lot of questions about, the China-US relationship. Now, bearing in mind a lot of our participants, as well as our friends from ACCA, a lot of our participants are from Australia and New Zealand, have studied there or have some linkages there. So maybe Ming Chun and Manu, let's start with Ming Chun first. The question would be, in terms of the political situation, obviously there's a limit to exactly how deep we can go into this, but there's a relationship, let's say, between China, Singapore, let's leave that, China and the US, and then Australia, Singapore, Hong Kong, and Malaysia are somewhere in between. So how do we reconcile what the drivers of this relationship are and the direction that we can expect it to orientate towards?
First, I will say I'm not a political analyst. I'm not an expert on political issues, but I have to say, I think Manu mentioned at the beginning, China-US relation is getting very different from a couple of years ago. I think the big trend are recognized by a lot of people. I would say, in China, we talk a lot about this. We see this is very, very challenging in a coming, years, coming decade, maybe. Like Manu said, no matter who will be the next, president of the United States, things will be different from before. But as I grew up in mainland China. I got my also college education there. Also worked for a couple of years in a few years, more than a few years in the government. So in the Chinese government in Beijing. So my understanding is, I think China will do its best to try to avoid conflict with its neighbor, with the US. And for China, the most important thing is still try to maintain economic stability. So I say, but we also need to understand, the Chinese government is also under domestic political and also public pressure to react to some of the unfriendly actions taken by other countries. If you are a government official, you have to do something. So that's all I can. As an economist, I don't know much about politics, but that's my personal view.
Interesting. And Manu, your thoughts, please?
Yeah, I think very much with Ming Chun on this, but certainly from a small country perspective, from where I sit, it is a very challenging world. I mean, we need both the US and China. We need good relations with both. And we would like to see both countries cooperate, because the whole world confronts very serious challenges that requires coordinated global cooperation and action, whether it's climate change or this developing this vaccine pandemics or whatever, right? And if that's not going to happen, and worse still, if the big powers come to us, small countries, say, you must take sides, I think that would put us in a very difficult situation. So those are some of the fears, and I think the governments around the region have to really think hard about how to deal with this tougher world. And it might mean that we need to really work much harder on strengthening ASEAN as an organization. I mean, currently ASEAN has done well, but it really is not the kind of organization that small countries need for protection in this very tough world.
Mm-hmm. Great. I noticed we only have 5 minutes left, so maybe I will finish by asking one more question to Manu. We're organizing this call from Singapore. As you know, the big news in Singapore is that we have called a general election. Now, I won't ask you specifically on that general election, but I think since we have a wider audience participating, interesting question that came up and has been asked is that in Singapore, we've got three broad groups of people. We've got the foreign workers, the citizens, and the expats. You know, how do you think COVID-19 will impact each of these individual groups?
Well, the poor foreign workers have really suffered the brunt of the disease. I mean, it's really sad. And as a Singaporean, I feel really, really sad, and I feel very bad about it. We really should have managed it better. Going in the long term, I think this has really reignited the whole debate about whether Singapore is overly dependent on lower skilled, relatively poorly paid foreign workers. I think we are probably going to move towards reducing that reliance over time. The second thing is on the citizens. My main concern is that some of the, in fact, quite a bit of the fiscal support for small, medium-sized companies will end this month and next month. What happens after that? Will we get a lot of layoffs? And that will affect citizens because SMEs are big employers of the citizens, right? And then, of course, you've got the expatriates who have unfortunately had to face some degree of xenophobia, which, again, I feel a lot of regret about. But the reality is that, you know, to be fair, and you take a step back, Singapore is one of the most open countries in the world in terms of accepting foreigners and immigration. And I think that will remain for a long time to come.
Mm-hmm. Great, thanks for that. I wish we had more time. You know, I think we've managed to ask maybe 10 or 15% of the questions out there. First, I wish to thank you for all your great insights. The reason why we held this conference is just to give everyone a sense of what's happening in the world outside. You know, the reason that's important is, you know, from like prison camps and cancer survivors to armies lined up for battle, it's been shown time and time again that the people that emerge best from these situations are the ones who are best prepared. You know, similarly, our profession as chartered accountants requires us to make decisions based on the best data. I was reading a couple of surveys, first from Harvard Business School, the second from McKinsey. Harvard Business School estimates that the top 9% of companies will come out of COVID stronger. McKinsey puts that number at a slightly higher 20%. Now, today, we've received excellent information on what to expect and how to prepare for the world ahead. So thanks to all the panelists for your great insights.
Thank you.
I have to say I'm impressed. We built this as an economist conference, but these are gentlemen that can not only draw the chalk on the blackboard, but have also provided us with real world actionable insights. So thank you.
Thank you.
Lastly, to all our participants, thank you for joining our call. Back to you, Sam.
Thank you, David. So just in closing, thank you once again to our esteemed panelists for joining us today for this insightful discussion, and also to David for being our moderator today. And to all of you out there, to all our members, thank you so much for joining us. It's definitely our pleasure to host these webinars for you during this difficult time. So please do look out for more webinars, and our Hong Kong, Malaysia office, and also Singapore office will be putting on quite a few more of these throughout the year. So thank you and have a lovely day.
Thank you. Thank you very much.
Thank you.
Thank you very much.
Bye.
Okay, guys.
Thank you.